JEPI is breaking records, and it's records you actually want to hold. In 2022, JEPI had the most inflows of any actively managed ETF in any given year ever, eclipsing the Cathie Wood hype that went into ARK Innovation in 2020. In all, $12.5 billion went into JEPI last year. JEPI now controls $18 billion in assets under management, which means investors trusted this ETF so much, they put their hard-earned dollars into it, so it better have some outstanding results. JEPI aims to not only deliver monthly income, but have less volatility than the overall market. Now, we all know how shaky the market was in 2022. It returned around negative 20%, meaning if one had held all their wealth in the stock market, nearly 1/5 of it would be gone in a 12-month period. JEPI, however, destroyed the market last year, having a loss of just negative 3%, while also delivering a 11% yield, which gets paid out in monthly dividends throughout the year. Surely JEPI cannot keep this amazing streak up in 2023 and beyond. Well, according to JEPI's own portfolio manager, Hamilton Reiner, there's no guarantee 2023 won't be any less volatile than 2022 was. He feels investors can benefit from having JEPI because it gives them dividends from buying and holding onto a stock. It gives them the options premium from the covered calls they do, as well as some of the upside potential in stocks, but at 1/3 less beta volatility than the overall market. Value can be added by anything that can be done to dampen volatility in an investor's portfolio, and thus people will continue to use JEPI for income purposes in 2023, but it's also going to be used as a defense position with its equity allocation. With JEPI, you're getting a basket of diversified stocks, and covered calls allow for some protection in sideways and down markets. Plus, at a modest expense ratio of just 35 basis points, Hamilton and his team will do all the work for us. They're going to be the ones who conduct all the bottoms-up fundamental research. They're going to be the ones who rank the hundreds of stocks out there to see if their risk tolerance is suitable for the portfolio. And they're also going to be the ones who go out and conduct all the options trading by doing out-of-the-money S&P 500 call options to generate that monthly income. Now, this type of work can easily take hours of due diligence each single week, which is why paying somebody that expense ratio is definitely worth it. Sometimes you gotta spend money to make money. In his interview, Hamilton says in order to make it into JEPI's portfolio, companies must have a consistent earnings stream. So say goodbye to companies that have inconsistent earnings or unpredictable dividends. They will be filtered out of JEPI by 21 analysts that work at JPMorgan Chase. They perform all the fundamental analysis on these companies. Out of their 127 holdings, Hamilton says many of these can be counted almost as if the stocks were inherited because they're so good that you would never sell them. Now, these are companies that have competitive advantages. They knock out their competitors, they can form moats, and they have income from several different sources. They often have a huge economies of scale, they have a unique brand or patented intellectual property. Hamilton says the reason JEPI did so well in 2022 is because they were actively managed and they don't just passively go out and buy into high valuations. They were able to avoid those hype stocks, those SPACs, and other riskier investments that have dominated in recent years, because those are the companies that are really going to struggle when times are tough. This is JEPI's portfolio. It's divided up by sector. Look how well diversified they are with consumer staples, financials, healthcare, industrials, technology, and miscellaneous, all making up at least double-digit percentages in their portfolio. Now, having exposure to all these sectors will really help them succeed in some areas when the market really tanks in others. For example, in 2022, consumer discretionary and telecommunications lost nearly 40% of their value, but energy had a mind-blowing 66% return. Again, this is why we don't put all of our eggs in one basket. Their top 5 largest companies are Progressive, ExxonMobil, AbbVie, MasterCard, and Bristol Myers. These are all really reliable organizations that dominate their sectors with significant market share and billions of dollars in revenue on an annual basis. Now, looking at some of their other top 10 companies, we got Coca-Cola, Comcast, Travelers Insurance, Pepsi, Hershey's. All of these are blue chip, high quality companies that pay dividends. This is what makes JEPI so great. and there's definitely room for them in every type of investor's portfolio, whether you're young or old, rich or poor, beginners or experts. Now, JEPI pays close to a 12% dividend yield. The big reason they're able to do this is because 20% of its positions are actually equity-linked notes, or ELNs. Now, ELNs are debt instruments that don't pay a fixed interest rate, but instead their return is linked with the performance of its underlying equities. ELNs are pretty complex for the typical investor to understand, and JP Morgan Chase is a little bit secretive on what their ELN investing strategy is. So just know that there are decent risks associated with JEPI. However, ELNs have been around for decades, and it's not just the fund managers at JEPI that use them for profit. The risks of ELNs are outlined in JEPI's prospectus. Because remember, after all, this is an actively managed fund, so JEPI isn't going to just blab out all their trading secrets. I'm sure a lot of companies would love to know how to duplicate JEPI's returns. Now, JEPI will sell 1 month out of the money calls. This part is really important because it allows for some upside in the event of a bull run. Unlike other ETFs like Q-Yield, which are actually sold at the money, thus that's going to limit their upside even more. And how it's no surprise billions of dollars are being funneled into JEPI. Its fund managers have truly created an amazing ETF with high income potential. The positions it owns should continue to hold up in uncertain times and prosper in bull markets. Thus, I'm going to be buying more and more shares of JEPI in 2023. Now, do you want to see my full 6-figure stock portfolio, which includes thousands of dollars of JEPI? Be sure to check out the link below. It will explain exactly how to do that. Now, my videos, they're also found in podcast form under the Collect Cash podcast name. I want to hear what your thoughts about JEPI are in the comments below. Do you think they're going to do well this year? Or maybe they're not going to do so hot? Make sure you like this video to help out a small-time YouTuber. Make sure you're subscribed, and I'll catch you on the next one.